Wall Street is in suspense, waiting for the crucial outlook for early 2023. The Fed minutes will clear up market sentiment. Besides, investors are anticipating the government employment data later this week. InstaForex analysts will tell you what to expect from the North American session today. The US stock market extended its decline in the first days of the year, despite optimism in the early session yesterday. The benchmark indexes closed in the red. As expected, the high-tech and energy sectors were to blame for the overall selling pressure. The major stock indexes retreated to the closing levels of the last year. The Dow Jones edged down 0.03%. The Nasdaq slipped 0.76% and the S&P 500 closed 0.4% down at 3,824 points. The New York pre-market revealed faint signs of optimism. Nevertheless, investors turned cautious in the early New York session, and they are braced for another turbulent day. First, they will get to know the ISM manufacturing PMI. Then, JOLTs job openings will be on tap. The cherry on the cake will be the Fed's minutes of the December policy meeting. Due to various scenarios, the S&P is expected to trade in the intraday corridor between 3,740 and 3,920 points. US stocks tumbled on Tuesday on the first session on the year like it was in the dismal 2008. The high-tech and energy sectors were the culprit of a selling pressure. Tesla again suffered losses. Its shares dropped by 12% because the company missed its goals in the fourth quarter. Apple also began the new year with a bad dynamic. Its shares fell by 4% because of a weak demand. Apple said that it's worried about weak demand, especially for MacBook, AirPods, and the Apple Watch. As a result of a massive stock selling, Apple's market value contracted by $85 billion for the first time since May and dipped below the landmark level of $2 trillion. Among 11 sectors of the S&P, the high-tech sector lost 1%, being the second worst one. The energy sector showed the worst performance, and the telecom sector closed yesterday with the biggest intraday gains. Meta shares grew 3.7%. Today, the energy sector is still printing losses. Chinese firms listed on the US exchanges are trading higher. The main high-impact events today are the Fed's minutes and the ADP employment report. Last year, the Federal Reserve raised interest rates aggressively, aiming to contain soaring inflation. As of the year-end, the official funds rate was increased to 4.25 and 4.5% from almost the zero level in March. Many analysts warn against the high expectations of serious changes in the Fed's monetary policy. Inflation was recorded at 7.1% on year in November. The strong labor market gives the Fed leeway to implement more rate hikes. The minutes are likely to confirm that the policymakers still give priority to inflation data. The annual CPI has been easing for a few recent months, but still remains way above the Fed's target at 2%. The minutes could indicate the Fed's intention to raise interest rates and hold them at elevated levels. At the same time, the document might contain different viewpoints among members, so the Fed might be entering a new phase when it will adjust its decisions to economic risks and employment. The rate-setting committee seems to be anonymous about increasing interest rates above 5%. However, the policymakers differ in strategies of completing the hawkish cycle. How long interest rates should be held higher and how fast they should be cut. In 2022, investors were discouraged by robust hiring in the US labor market. The fresh non-farm payrolls will show hiring in December and will be the key to market sentiment in the next few weeks. The US dollar turned sore ahead of the crucial economic reports. Its index sank 204 points, having shed almost 0.5%. The intraday corridor for the index is seen between 103.20 and 104.80. The US dollar index was hurt by a rapid rally of its rival currencies. Previously, investors were pleased that inflationary pressure in Germany and France is much more than expected. In light of the inflation data, the euro and the pound sterling perked up. Besides, the Australian dollar welcomed the news on the opening China's borders. Moreover, Beijing is discussing the option of lifting the ban on the coal extraction. So the Aussie jumped by over 2%. No wonder the US dollar lost ground under such fundamental conditions. For the time being, market participants estimate the chance of a rate hike by 25 basis points in February at 68.8%. The market also expects the funds rate to peak at 4.95% by June. The minutes will shed light on how the Fed intends to slow down the pace of further rate hikes. For the most part of 2022, the Fed resorted to aggressive rate hikes by 75 basis points and softened the pace to 50 basis points in December. Last month, Jerome Powell expressed the Fed's commitment to bringing inflation down from elevated levels. However, he said that policymakers are aware of the risks entailed by too aggressive policy. The Canadian dollar is taking advantage of the greenback's weakness. The USD card pair fell seriously intraday, having dropped by 1%. The instrument is now trading at 1.3520, and the currency pair is likely to hold in the intraday corridor between 1.3480 and 1.3620. The Canadian currency is growing today despite fundamentals, so prices are extending their losing streak. Brent futures sank by 2.6% to trade at $79.96 a barrel, and WTI tumbled 2.4% to trade at $75. Previously, both benchmark rates slumped by more than 4% on Tuesday. Brent crude logged the sharpest intraday loss for more than 3 months. The reason behind the steep losses is traders' fears about the global economic prospects. Weak demand could be accompanied by the oil glut in the global market. Major oil exporter Saudi Arabia might cut prices of its flagship grade Arab Light for deliveries in February. The price has been already set on a 10-month low this month because the market is overshadowed by concern over the looming glut. In this environment, crude oil is trading lower, hence the loonie is trading under high volatility. If the US dollar regains its footing today, the loonie will have no choice but to weaken. On the back of the market boost, Bitcoin climbed above $16,800. The token tried to consolidate above this level for the whole trading day. Popular altcoins also traded in the green. Sam Bankman-Fried pled not guilty to 8 criminal fraud charges related to the spectacular collapse of his crypto exchange. The 30-year-old co-founder and former FTX CEO is accused of taking billions of dollars of his customers' money for backing his hedge fund, Alameda Research, and for his own personal use. Bitcoin's dynamic today will depend on the opposite correlation with the US dollar index. The token could continue its rise to 17,200 in case of the dovish Fed's minutes. Alternatively, it could retreat to 16,200 in a case of the Fed's hawkish rhetoric. InstaForex analysts warn you of a higher volatility today and the sharp market response. See you tomorrow.